Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Monday, June 14th, 2010. This morning we're talking about getting better, and global recovery appears to be gaining traction as regions around the globe are reporting increases in economic data that's consistent with growth. Right here on our chart, we're taking a look here at the pound dollar. You can see pounds higher. We're on a daily chart. There's news out of the UK that the CBI came out with a report predicting faster economic growth and a narrower than expected budget deficit. So this has caused the market to think that they're going to see some inflation. British CPI figures are due out tomorrow, and this could force the BOE to potentially move on rates a little bit sooner than expected. So it looks like the market's in favor of what's going on in the UK as far as how they are handling their budget deficit and their economic prospects going forward. Overnight, we've also got the euro higher. Okay, if we look on a daily chart, just a nice little, looks like a little leg right up here. They came out with industrial production figures that came in much better than expected, posting a 0.8% increase versus an expectation of a 0.5% increase. And this, we're seeing this is a more familiar pattern, but on Fridays, typically, you see the market, they want to take the risk off the table because going into the weekend, they're afraid that, something may come out of the Eurozone, which is going to cause fear in the market, which is going to cause riskier assets to sell off. And every weekend that we get through it without one of these events occurring, okay, the market then goes back to reestablishing their risky positions. And no further pair exemplifies that like the Aussie dollar or Aussie yen. If you can see here on the Aussie's moving higher. Okay, no real news coming out of the Australia, but the minutes from the RBA policy meeting are going to be released tomorrow, so that's going to give us a clue as to a future rate policy. We're also seeing some Kiwi strength this morning. Let's just look at it here versus the Japanese yen. Okay, retail sales figures came in a little bit worse than expected at 0.3%, but nevertheless, the RBNZ is expected to continue to raise rates throughout the year. Now, the bank chief Bollard said that a higher Kiwi is not helping their trade balance, all right, as the Kiwis gain roughly 7.5% versus the dollar over the past year. But the economic story looks pretty good so far in New Zealand, and it looks like we're going to be seeing a series of rate hikes as we go forward. Last, I just want to take a look at is Japanese yen, dollar yen. It's a pretty narrow range right today. We've got the reestablishment of carry trade, so there's some yen weakness. We're also seeing the Nikkei is higher. There was some news coming out that business confidence has improved there. Okay, so stocks are higher. They're saying that the business climate's improved, which is going to pave the way for further business spending, which is going to help expand on the export-led recovery that they're seeing in Japan. So we could see a further push higher back up into the 95 range in the coming days, possibly weeks. So right now the number one fear in the market is obviously what's going on over in the Eurozone. They've got issues with the banks. There's these debt problems that are sitting out there, and people are just sort of afraid that something's going to come out with negative news, which is going to sort of derail all of this risk taking. But as long as we don't see that, then it looks like recovery is taking place around the globe. So the economic data is going to continue to come in as long as inflation doesn't pick up too much. Now we're going to get some inflation numbers this week. We're going to get the U.S. CPI numbers and PPI numbers here on Wednesday and Thursday. We've also got Great Britain's CPI number tomorrow, so that's going to give us an idea of where we are in the inflation spectrum. But right now, debt reduction plans and deficit reduction plans appear to be in the works, and these governments need to balance this with sound monetary policy. All right, so they're kind of walking a fine line between, what to do with the fiscal environment as well as the monetary environment. So for now, the market appears to be content with the way things are going. Looks like there's more risk-taking going on. I'm going to expect to see markets continue to go higher today unless some sort of news comes out, which I don't think we're going to see here in the U.S., but you never know. So, like we say in trading, be prepared to ride the wave. Just get off at the first sign of any problem. So that's what we have today. Good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.